how's it going? In today's video, I want to jump into one of the most important aspects of property investing, which is dealing with credit. But not only dealing with credit, but also making sure that you are able to get credit. And I am talking about managing and owning and having your credit report on a lockdown. Some of you might not even know what we're talking about. What is a credit report? Basically, when you are employed and you are making payments of anything, the credit bureau, which is the body that owns all form of data in the country, they get to go in and measure to see, are you doing this correctly? Are you paying? If you're not paying, then they report on it. And then there's companies that have then gone on to actually now make it a business, and they can give you a credit report. This credit report also allows you, if you've got a good credit report, when you approach any lender, the banks, any lender, maybe for the retail, that's where you probably might have known about credit reports. Remember when they reject you and then they say to you, we cannot give you credit, it just basically means that your credit report is not in a good space. So in today's video, I am going to be talking to good experts. I reached out to my friends who actually have a business around credit management. That is the report part of it. And they look into how deep actually, what is a credit report? How can you make sure that your credit report is improving? So they share with us a little bit of tips on how best to improve your credit report. And then above that, how do you protect your credit report? You have had cases where someone else has stolen your profile, your ID, your driver's license, and all of a sudden, Bank X, they call you to say, hey, we are looking for our money. And you know that you have never been there. It happened to someone that I know who's in the community, and bingo, it took them almost a year to clear their name. My friends, if you're in the game of real estate, you want to protect your assets, not the building. Your credit report is actually an asset as well. So stay tuned as I dive in with my good friends, and they are going to be teaching us a little bit more about credit reports.
Yeah, good evening, guys. Thank you very much for the opportunity to chat to you guys, and also just to educate you guys a little bit about the credit reporting industry, and to help you guys make the most of your credit scores and access better finance deals. But before we jump in there, I think it's probably a good idea to give you guys a bit of history on David and I, and just sort of where our journey has come from. Both of us have been in business for well over 2 decades now, and we've been in the fintech space, so continually refining and trying to find better financial systems and better ways to go to market and better ways to access money. And so we've been involved in everything from the insurance space to applications. And about 8 years ago, we started looking at the credit reporting industry specifically in South Africa. And we realized that the credit reporting industry in South Africa was very much focused on institutional business. Basically, what would happen is if you had a business and you wanted to go and credit vet somebody, you would go to a company like TransUnion or Experian or one of the bureaus, and you could then basically access a consumer's data and have a look at their financial track record. Now, what we felt about 8 years ago when we entered the market is that there was a big disconnect between the consumer and their own data, which is actually their data, and what was happening with that data. And we felt that it's all great and well that companies are basically drawing credit profiles and credit reports on people, but what does the actual consumer do to improve his credit status? What does a consumer do to be able to actually go and improve their profiles? And so we came up with a slightly different business model from the traditional credit bureaus, and we decided to be 100% consumer centric. So we don't do any institutional business with My Credit Status. It is 100% purely focused on the consumer. And I think over the last 8 years, something that we've learned through the journey is that for the most part, people in South Africa are actually pretty financially uneducated. People are good with cash. People are good at at making money. But the one thing people are not good at is managing credit and managing finance and managing their own personal relationships with finance. So we set out to create a system that would basically get all the data that institutional companies would normally get. So for example, if you'd go as a customer and you'd take out a rent on a place and you decide to take up a lease, that company would usually go and look at your credit profile. The problem is most people never actually got to see their credit profiles until it actually sat with the customer with the client who actually went and looked through Experian's records or TransUnion's records and then could actually show you what your credit profile looked like. On top of that, we realized there was a very big gap in education. So, Darby and I took the stance 8 years ago that we were going to build a really good online platform that would not only give people their credit profiles, but really help them manage that profile, improve that profile. And I think what differentiates us from everybody else in the market, a lot of the credit bureaus, a lot of the institutions out there providing credit reports are actually, in many respects, actually encouraging irresponsible lending. What we're trying to do is we're trying to encourage a very holistic approach. One is responsible lending, and two is educating people on their actual personal finances, which extends way beyond the credit report. Because here's the thing, you can give somebody a credit profile and a credit report, but if they don't know how to read that data and interpret it and make improvements for themselves, that report on its own is pretty much useless. So what we've done is we've educated an entire university of content around personal finance into our platform. And so, when people come to us and they've got a credit profile problem or they've got a credit score problem, we actually are able to say to them, look, these are the exact steps you need to take in order to improve your credit profile and your credit record. And, most people think that having a good credit score is something that you don't have to worry about until the time when you need a loan. And the reality of it is that things are changing around the world. I mean, we've got, in China, there's a thing called a social score coming in now, where it links your social behavior with your credit profile. And these things are basically trying to establish whether you're a good citizen. I think in South Africa, we're still a long way from there. But I think it's important that people start thinking about being good citizens, whether that's being a good financial citizen, being a good social citizen. And so when you start looking at your credit profile on a regular basis and you start monitoring your credit profile on a regular basis, what you're essentially doing is you're actually telling institutions that, hey, I'm a good citizen and I'm good to do business with. And obviously, the better your citizenship status is, the better deals you're going to access. And I mean, this we're already starting to see the effect in the marketplace where if you go for job interviews in certain industry sectors, they're going to check your credit profile. If you're involved in the security industry and you're involved in cash, they're going to check your credit profile. So I think now more than ever is probably the most important time ever to really educate yourself about credit reports and specifically your credit profile. I think the best way to really understand the credit profile and the credit report is really to go back to basics. And basics is, do you have loans? What are you paying on those loans? What is your history of employment that's shown to people out there? What is your sort of repayment history that's shown out there? And the great thing about that is we can all, every single citizen in South Africa can go and access that information now. Previously, that information was not available. And guys like ourselves and a couple of other bureaus have fought really, really hard to bring these products to the marketplace, because for the most part, consumers are still pretty uneducated about what their rights are, about how to improve things. And that's really where we come in and bridge the gap. So, without further ado, I'd like to hand over to Davy, who can explain a bit more about our product, and we'd be happy to answer any questions specifically that come up along the way.
Cool. Well, let me get going here with the screen share. You guys see the screen?
Yep.
Okay, cool. So like Jason said, and what TJ said as well, we're going to be teaching you how to increase your credit score in today's lesson. But I need to stress this, I can't stress this enough, increasing your credit score is an ongoing process. It's not a quick fix. Obviously, if you've made a lot of mistakes in the past, then it's going to be a bit difficult to correct that. So I've got a lot of information here tonight. I'm going to try and cramp it all into this one presentation. So we only got about an hour and a half. So I'm going to try and do my best to go through it as quickly as I can. I'm assuming, based on the previous webinars that we have done, that there will be a lot of questions and they will be very specific to your individual circumstances. So as we go along, please just put your comments there, and at the end of the presentation, we will get to it, as I'm sure they usually very much are quite a lot. So what we'll teach you today is understanding the credit scores and bureaus. If you understand a credit score and what a bureau is, how a bureau works, then it's a lot easier to improve your credit score. Second is how credit scores are calculated. So if you can, let's assume you go to a doctor and you don't tell him what's wrong, how do you feel, he's not going to be able to diagnose you, right? Now that's the same thing with credit scores. You need to know exactly what to look at and how these credit scores are calculated in order to know what to improve. I mean, it's all good and well spending hours just improving the duplicate listings on an address, but it doesn't really have that much of an effect, you know? So it's very important to understand how these are calculated. Then the importance of a good credit score, especially for you guys in the property section. And finally, how to fix your credit score. And we're going to give a quick demo of how the My Credit Status platform works. Justin has already explained the platform, and we'll just show you a visual presentation of that. So understanding credit scores and credit bureaus. A credit score is a three-digit number. Sorry, that's not supposed to be letter. To determine the likelihood of you repaying your loan. So it's very simple, right? These banks want, or any credit company out there wants to know the likelihood of you repaying your loan. Now, this three-letter digit basically determines that. It was started in, I think it was the 1970s. Eventually, in the 2000s, it started making its way into America, and only late in the 2000s, it actually came to South Africa. So it's actually very new in South Africa. It's probably only about 15 years or so that we've actually actively been using it in South Africa. And then a credit bureau is basically only a custodian of the data. So contrary to popular belief, many people think that a credit bureau owns the data and they can put whatever they want on this, where it's actually completely incorrect. The data actually doesn't belong to the credit bureau at all. It actually belongs to the creditor. So in South Africa, we've got an organization called SACRA. Now, all the creditors basically sends information into this SACRA, which is the body that collects all the information, and SACRA distributes this information out to the credit bureaus. And that's how the information actually gets shown on your credit report, right? So why am I telling you this? I'm telling you this because if you understand that that information doesn't belong to a credit bureau, but it actually belongs to the creditor, then you actually know that you've got the power to actually negotiate with creditors in order to get listings removed from your credit report, because you need to get that sorted out at the creditor side instead of the credit bureau side. Justin, I think you'd like to add a few things there as well on the credit bureaus and them being the custodians of the data.
Yeah, absolutely. I think one of the big take-home points, which a lot of people don't realize, if you are a company in South Africa that is regulated by the Financial Services Board, in other words, you provide insurance, you provide loans, microloans, home loans, vehicle financing. Even if you have a business that provides retail store accounts, part of the FSB requirement is that you have to report on your consumers' data into the central database, which is SACRA. Now, the reason for that is that basically we have a financial bill in this country, which is basically trying to promote responsible lending as well as responsible financial citizenship. So the FSB basically forces everybody who loans money, who's regulated by the FSB, who provides store accounts, to basically collect data on their consumers. And that data includes things like the most recent known addresses, contact numbers, payment history on your accounts, et cetera, the loan amounts, all these sort of things. So basically what this means is if you go and apply for, let's say, for example, a credit card at FNB, and you already have a credit card with Standard Bank, what this whole system allows the financial sector to do is basically get a very honest view of each consumer and know whether that person is over indebted or not. So that's really the FSB's role in the thing. Now, in terms of government legislation, there's an institution which we all know called the NCR, which is the National Credit Regulator. And the National Credit Regulator basically oversees all the credit bureaus. And up until probably the last 3 or 4 years, the credit bureaus have pretty much been able to do whatever they want with your data. They've pretty much paid for the data from SACRA. They've farmed it out. They've given it to call centers to call on people and sell them products. I think we've all had the cold calls. But what has changed in the last 2-3 years is there's been very strict government framework around making sure that the bureaus are only custodians of the data, meaning they do not own the data. Your data is your data and your data alone. But with that responsibility of it being your data comes the responsibility of making sure that your listings are correct. And this is why we believe it is absolutely fundamental to every person in South Africa to really understand what their credit scores and credit profiles are. And people say, if I go to TransUnion, is it better that if I go to TransUnion or go to Experian or go to My Credit Status? The honest answer is, as far as the report goes, you're going to get the same basic report from every single credit bureau. The data on there is all coming from a central location. What changes from bureau to bureau is the way the information is presented. And as I've already said earlier in this webinar, is that traditionally, the reports were developed for institutions. It was developed for the guys sitting in the financial parts of the businesses making decisions whether they should give you loans or not. When you come to My Credit Status, and there are a couple other platforms out there as well that are starting to face the consumer, these systems have been built to be more user-friendly so that you can really understand and interpret your data. So when it comes to credit bureaus, the most important thing that it is to understand is that the credit bureau does not own your data. You own your data. You're responsible for your data. Nobody can sell your data or do anything with it. That is not within the legal framework of the NCR and the FSB within the country.
Yeah, I think to add to that, like you said, each bureau has a different credit score. So what that means is each bureau has a different scorecard, right? So they've got their own algorithm to determine the credit score. But what I always say is don't get obsessed about the credit score. Rather look at the range class that you fall in, because that's going to basically determine what kind of a customer you are. So you want to obviously strive for excellent, because if you've got an excellent credit score, that's when you get the good finance deals and all the other perks that goes along with it.
Absolutely. Davy, I just want to address one question that's come through here from Sabella. I hope I pronounced your name correctly. Sabella asked is, how does the credit bureau protect consumers against fraud, such as identity theft? Well, it's a very good question. It's something that we will be covering in a little bit more detail in this webinar, but the credit bureau alone cannot protect you. Understand that the credit bureau is simply a custodian of your data. So they're not actually looking at your data. They're not doing anything to proactively protect you from identity theft. Identity theft is a major, major problem that's on the rise in South Africa. There are a lot of foreign nationals in the country at the moment that are learning how to do identity theft very successfully. They've already infiltrated organizations like Home Affairs. And then it's simply a question of them getting your contact details and pretty much then, cloning your identity and going and using it to apply for loans. So one of the tips that we can give in terms of protecting yourself against identity theft is make sure you get a regular report on yourself. And the reason why we suggest this is if you start seeing inquiries against your name for opening various accounts all over the show that you actually never looked at doing. So for example, maybe you see somebody's applying for looking into your profile from FNB card services, but you actually never applied for an FNB card. There's a very high chance that somebody is actually committing identity theft and somebody is using your identity. So one of the best things you can do to secure yourself against identity theft is get a report on yourself regularly and monitor the inquiries on your profile. If there's a lot of inquiries happening that you did not authorize, chances are you're going to be subject to identity theft. So it's a very, very good question.
Yes, I think the biggest problem people make is they get a report only once a year, and that's obviously because it's free from the credit bureaus, right? So once a year you can get a free credit bureau from a credit report from the bureaus. But that's a huge mistake because, like Justin said, now you've obviously got identity theft, and if you only get your credit report once a year, then I mean, identity theft can go right on your credit report. People can be pulling inquiries as much as they like, and you won't even notice it. So that is one of the major reasons why you need to get a report monthly. Also, you need to track the changes. Like obviously, if you're trying to increase your credit score, you need to track the changes. It's like going on a diet. You know, you can't climb on the scale once and never get on it again. So it's a continuous process, and we highly encourage that you obviously check it monthly.
Davi, Michal asks, how do we get regular reports? Michal, just to give you some indication, as Davi said, you can get an annual report once or for free from the credit bureaus. However, I wouldn't suggest going that route. If I can give a shameless punt, if you go to mycreditstatus.co.za, you can sign up for a monthly service with us where we'll provide you a report every single month. On top of which we give you a host of tools, which Davi will go through, which will help you actually improve your credit score. And in my opinion, the subscription that you pay to a service like ours will pay for itself in a matter of months as you improve your score. I mean, you only need to improve your score up 1 or 2 levels, and you're going to be accessing better finance deals at better interest rates. So I highly, highly recommend, if you are interested in getting a regular monthly report, go to mycreditstatus.co.za and click on our membership option and join up there. It's really as cheap as chips, probably less than a cup of coffee at Seattle.
Okay, so how are credit scores calculated? Well, the first biggest one is obviously the repayment history. So this goes without saying, right? The creditors wants to see your history when it comes to repaying your loans. So your credit history is the biggest part of the calculation when it comes to your credit score, and it accounts for 40%. Now, your credit history, that's the part where you'll see when you go get your credit report, you'll go down to your payment profile. Now, your payment profile shows every single month that you have been paying, and it shows how on time you've been paying. You will see a little green OK sign, which means you're on top of things. I'll show you a little demo later on, and you can see exactly what I mean. I'll go through the report, and there will also be red numerical numbers. Hopefully there won't be, but if there are, then it means that you are behind on your payments. So if you've got those listings, it's also called adverse listings. It's also called default listings. It's also called black listings. So to make it very easy for you, it is just payments that haven't been on time. That is a default listing, adverse listing, and a black listing. So that accounts for the biggest part of your payment calculation, or credit score calculation. So if you only sort out that problem, then you sort out 40% of your total credit score, right? So that is why I say it's so important to understand exactly how your credit score is calculated, because that basically shows you exactly what part of your credit score you need to give a lot of attention to.
Yeah, Dave, if I can give a great tip quickly on your repayment history, since it does account for about 40% of your score, one of the best things you can do to basically improve your credit score is just go and set up an automatic monthly payment a day or two before your actual payment is due. So let's say, for example, it's a credit card balance, right? And you're paying the minimum monthly balance. And let's say your payment date is traditionally on the 31st. Go and set up an automatic payment that happens 2 or 3 days beforehand. Because what this does, and if you have to look at it from the side of the companies looking to loan you money, the banks, etc. What they want to see is they want to see somebody who's not going to only repay them, but people that are going to repay them on time. This is about being a responsible lender, a responsible borrower. So, all you have to do to really get past this thing, just make sure you do your payments ahead of time. It's really, really simple. What you don't want to see is going past due. If you are constantly past due, you need to fix that. If you don't fix that, it's going to affect your score in a major way.
Yeah, if I can give you guys one massive, massive tip, and this is something very, very few people actually know, is let's assume you've got overdue payments, right? And now it's listed on your credit report. But this company didn't give you notice that they're going to report this or that they're going to list this on the credit bureau, then what you can do is you can actually dispute it. So the legal framework in South Africa goes like this. A company has to give you 20 days notice in writing before they can actually list something on a credit bureau. So let's assume you have been behind on your payment. It's month end, we're in a new month. You completely forgot about your payment. And this company, let's say Foschini, doesn't notify you that they're going to be listing you on the credit bureaus because of your late payment. If they list you without actually notifying you, you can actually dispute that with the credit bureau because it's actually illegal.
Yeah.
And that's a massive tip. Very few people know about that.
We should be charging for that tip.
So the second part is the second biggest part of your credit score calculation. It is amounts owed. So this basically means your credit utilization. So this basically, to put it in simple terms, it is your revolving credit, the amount of credit that you are using. So let's assume you've got a 10,000 Rand credit facility on your credit card, and you only use 1,000 Rand of that credit facility now in August. Then it means that you have used 10% of your credit utilization. Now, as you go to 100% of this credit utilization, the more it counts against you. So this part is extremely important. It's 30% of your total credit score. So if you've got credit cards that are maxed out, then it probably means that you're you're damaging 30% of your credit score just by having credit cards that are maxed out. So the easiest thing to do is just pay off on some of the credit card balances and your score will increase almost immediately. So that is one of the tips that will increase your credit score the quickest. There are very few of them because, like I said, it's an ongoing process, but that is one of the things that can quickly increase your credit score is by fixing your credit utilization ratio. So what exactly is the optimal credit utilization ratio to have? Well, it's 30%. It's very ironic that it counts for 30% of your credit score as well. But 30% is the best number or the optimal number that you want to strive for. If you use more than 30%, then your credit score is going to get docked. Now, when it use more than 50%, it gets docked again. And obviously, as you get closer to 100%, then it will count against you. So when you're using credit, you need to use it responsibly. That's what lenders want to see, and that's why this part accounts for such a big part of your credit score calculation, because it's basically the ultimate test on how well you're managing money. If you're spending close to 100%, it means that you're not managing money very well. So that's also a very good tip: is sort out your credit utilization. Strive for 30% and don't use any more than that. If you find that you use more than that, I actually a few years ago, it did happen to me because I put all my purchases on my credit card because I get a lot of e-bucks when I do that. So the simple fix is phone up your bank account, ask them to increase your credit facility. Then make sure you stay within your credit utilization ratio of 30%.
Yeah, Davi, I think, again, we just need to reiterate for people how this is looked at from the other side of the fence. So if you imagine that I'm a bank and I'm looking at TJ over there at the moment, and I want to see, is TJ a responsible borrower? One of the things I'm going to look at is what kind of facilities does he have access to, and how much of those facilities is he using? So let's say, for example, TJ has 3 or 4 credit cards with a total facility available to him of, let's say, 100,000 Rand. Okay. If I see TJ using a full 100,000 Rand, what that's going to tell me as somebody who's busy looking at loaning him money, or an institution looking to loan you money, it's going to say, hey, this is a red flag because this guy is maxing out all his facilities. What I want to see, if I'm loaning money as a bank, I want to see somebody who's way below their maximum facility, right? Because what that's going to tell me is that this person is borrowing responsibly. So that's the key thing to understand here. What you want to show, it's a bit like dating, as I always say, Davi. It's a bit like putting on your best clothes for when you go out on that date for the first time. It's the same thing with your credit. You basically want to show, hey, I'm not maxing out my credit cards. I'm not maxing out my overdraft. I'm not maxing out my loans. I've got the facility, but I'm managing it well within my means. And that number that you're looking at is 30%. Never, ever, 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 ever use more than 30% of your facilities available. Because what the credit report now does is it takes account all your available facilities. It takes a look at what sort of facility do you have on your credit cards? What sort of facility do you have in terms of your home loan? What sort of facility do you have in terms of your store accounts? And how much of that are you using? If you're going about 30%, trust me, your credit score is going to suck.
Okay, so the second part is the length of credit history. So that obviously is the third most important part when it comes to the credit score calculation, and it accounts for 20%. That basically only means the age of your account. So what a lot of people will do is, if they've got, let's assume, old credit cards or old accounts, is they will close their accounts. And funny enough, that will definitely not help you when it comes to increase your credit score. It will actually hurt you. So what you need to do is, if you've got old accounts, leave them open. I mean, use them every now and again. Don't use them irresponsibly, of course, but leave them open, because it actually counts in your favor if you've got a history. It's actually very logical. I mean, these credit bureau or the creditors wants more data on how long back they can see of you actually repaying these accounts. So if you can show a good history and a good repayment history of you always being on time, then it's obviously beneficial to them to actually give you money. Then the last part is the new credit and new inquiries. So you've got two different kinds of inquiries, right? You've got a hard inquiry and you've got a soft inquiry. Now, a soft inquiry is when you pull your own credit report, because that basically means that you are just looking at your own credit report, and that actually doesn't even show up on your credit report. So if you now pull up a credit report, it won't show on your credit report. But let's assume you are applying for a home loan, which many of you obviously do. Then that will show on your credit report. And if you've got a lot of them, and you've got a lot of them often, then it'll obviously count negative towards you. Periodically, as it goes along, your credit score will gradually increase again. But yes, if you inquire for a lot of finance, then it obviously means you're a desperate person, and your credit score will go down because of it.
Yeah.
So the importance of having a good credit score, why is it so important? It's funny, we had a podcast the other day with the MD from Carfin, and he said that he actually thinks that a credit score is the second most important thing in your life, first being your health, which is pretty funny, but it actually is pretty important. There's quite a lot of reasons why, and I'm going to go through it just now.
And it's going to get even more important over time.
Yes, definitely. Especially like now with what DJ said, we're sitting with historical lows when it comes to interest rates. So obviously now it's the optimal time to have a good credit score, because it means that you're going to be getting a lot of access to finance. So for you guys that obviously want to apply for a home loan, if you don't have a good credit score, you're not going to be getting a home loan at all. And believe me, this is the first thing that lenders look at when you apply for a home loan. If you can't get a home loan, obviously you'll need to get private funding, or go in partnership with someone to get private funding. But if you want to get access and you want to get a home loan, you need to sort out your credit report.
Yeah, Davi, before you go on to the next point, I think this is something that's very relevant for TJ and all the members on here. What people don't often understand about the way money gets loaned from the banks down to the actual consumer, especially when it comes to home loans, because home loans is a considerably big purchase. We have in the country, we have the Reserve Bank, which provides loans to the retail banks, and the retail banks then provide loans to us, right? Now, what happens when there's a liquidity problem in the market? So, for example, things are getting volatile. Banks and the Reserve Bank are worried about the amount of money in circulation versus the number of assets they hold. What they start looking to do is they start looking to tighten the requirements for finance. So, many years ago, you could get 110% bond, which would allow you to basically purchase the home, pay for the transfer duties, and maybe even put some furniture inside. And then we sort of went away from that completely. And for a long time, you could only access, 70% finance, 80% finance. Now, a lot of the institutions over the last year or 2, 3 years have gone back to 100% financing, which has been great. But the problem that happens when the market contracts and there's a liquidity problem, the banks traditionally lend less money. It's not that they don't have the money, it's that they have less confidence in putting their money into assets which may not hold their value. So what happens is they start taking a look at all the applications and they literally just weed out the bottom. So if you've got weak scores, you can pretty much just throw that application out the window. Whereas in a very liquid market, guys with average scores are going to get finance, right? They may not get the best finance, they may pay more in interest, but they will still get finance. Now, the thing is, in a contracting market, what happens is capital hasn't dried up, but the banks are less likely to loan money to riskier accounts, right? So what they then do is they just say, you know what, we're going to cherry pick the top 10% of people, and they're going to look at your credit scores and look at your credit profile. And if you're not in the top 10%, the top 15%, your application's not even going to make it through the door. So it's really, really critical to understand that in a market like we're in now, which is becoming a buyer's market for property, you absolutely have to make sure you've got a good credit score, because at the same time, while it's a buyer's market, in order to access finance, you've got to be in that top tier.
Yes, also you're going to be getting better interest rates. So if you've got a better credit score, you're going to get a better interest rate from your bank, which will save you thousands and thousands over the long run. I'll show you guys an example just now of actually two people purchasing or getting a home loan, how much you're going to be saving. You get lower insurance premiums. Your insurance providers obviously look at credit scores as well. And then if you want to rent a place, most people these days, or most agencies, actually pull your credit report. I can't remember of a time when I was renting where they didn't pull my credit report. It obviously depends on where you rent. Obviously, if you guys are trying to get tenants, the best thing you can do is obviously pull their credit reports and credit scores, because it's going to show you what the likelihood is of them defaulting on your rental payments. So if you don't do that, you're running a massive risk. So definitely pull credit report or credit checks on your tenants. And I'm sure that DJ and his team obviously have spoken to you guys about this as well. Obviously, combat identity theft. So from 2018 to 2019, identity theft was on the rise by, I think it was an increase of 33%. So it's definitely rising now with the whole COVID thing and people desperate for money. Identity theft is going to be rising even more. So if you check your credit score, that's obviously the best way to combat identity theft. If you see inquiries popping up on your credit score, that means that someone is trying to steal your identity. And then last but not least, in some employment positions, they actually do determine your credit score. Not in all of them, but there are certain industries where they actually look at this. So here's an example of someone looking for home loan finance, two people looking for home loan finance. Person A has got a good credit score. Person B has got an average credit score. Both is a home loan amount of 1 million. And the interest rate of person A is 7%, which is prime at the moment, and person B is 9%. If you don't have a good credit score, that's most probably what you're going to be getting. But the home loan term, 20 years, but look at the amount that you're actually saving. It's 262,800 Rand. Now that's astronomical, right? I mean, over the total term, that's what you're going to be saving just by having a better credit score. So what we always tell people is first sort out your credit score and then go get a home loan, because your home loan is going to be dependent on your, or the interest that you're paying is going to be dependent on your credit score. Now, if you've got a home loan already, you can always go and refinance it after you have obviously increased your credit score. But that's one tip I can give you. If you've got a good, if you didn't have a good credit score when you obtained a home loan, and when you do get a credit score or good credit score down the line, then one option is obviously to refinance, and you can then obviously decrease your insurance or your premiums or monthly repayments.
Restructure a deal once you've got a better score. Yeah.
I don't know, is there anything you want to add there, Justin?
No, I think everybody's scrounging around looking for free money. I don't know of a single person. I don't know of a single business who doesn't like free money. I like free money. Like, I like to work, but I like free money. And if you want free money, it's as simple as accessing better finance. It's as simple as putting yourself in a position to get better deals. I mean, I've got a saying which I use in all my property deals. And TJ, I hope you're going to steal it if you haven't already used it. If your first offer is not embarrassing enough, then it wasn't low enough. And, this is pretty much the same way we look at finance deals. I mean, You've got to go into finance deals and you've got to beat the hell out of whoever's giving you finance and push those interest rates right down. Now, you can do that through good negotiation. You can do it through a lot of tactics, right? But the number one tactic is come there with a good profile. If you've got a good profile and you are presenting yourself to the banks as a good financial citizen, well, you're giving yourself a pretty good chance at getting free money, because free money is right there in front of you in lower interest rates.
This is the part you guys are all obviously waiting for. How do you fix your credit score? First, goes without saying, you need to get your credit score report. That's going to sound pretty funny, but you will not believe how many questions we get on a daily basis of how can you increase your credit score. When we ask them if they've obtained their credit scores, they tell us no. So obviously, you cannot fix what you don't know. So get your credit score first. Second is scan for errors. Now, according to news sources, about 80% of the people have errors on their credit report. Now, that's astronomical, and that's probably pretty frightening, because that means that there's about an 80% chance that you also have errors on your credit report. From those 80%, about 1 in 5 people, the errors of one out of 5 people is actually damaging their credit scores. So it goes without saying then that if you've got credit errors on your credit report, then it's a pretty easy fix, right? But if it's an error, then you can have it removed pretty quickly and thereby increasing your credit score as well. So if you have found errors on your credit report, then you obviously need to dispute it. So let's assume you see an account. Let's take Foschini. They've been on the radar now. So let's use them again. Let's assume you see an account from Foschini popping up on your credit score. What you can do then is you can take this, you can dispute it with the credit bureaus, and the way you dispute it is you basically type up a dispute letter, legal template, you send it to them along with the proof of your claim and along with your ID and your residential address to prove your address to the credit bureaus. And then you wait about 30 days and for the credit bureaus to get back to you. According to law and according to the NCR law, they have to get back to you within 30 days. Now, if they do not get back to you, you can phone them up again and you can threaten them by going to the NCR, because they are pretty scared of the NCR, believe me. They have to comply with the NCR regulations every month, and they actually undergo compliance meetings every month to also comply with this. On my credit status, we've actually made it pretty simple. With the click of one button, you can generate a dispute. You can go to your account, click the button, it will generate a dispute letter, and you can just send it off to the credit bureau. So once again, that makes us a little bit different from the other credit bureaus out there. Now, you also got a lot to say about the credits, about the dispute process, Justin.
Yeah, I mean, disputing incorrect listings is a major pain in the ballsack, to be honest with you. I mean, I've been through this process like so many times, and I want to tell you, it's like pulling teeth, because you have to understand the credit bureaus are not incentivized to update incorrect listings, right? There's no financial incentive for them to do it. Now, traditionally, the way it works is you've got to prove that an account's been paid, you've got to prove that a listing is incorrect, and then you've got to put it all together in a very specific format using specific legal templates. And the credit bureaus themselves are under obligation in terms of the NCR licensing to basically correct those listings within 20 working days. That's what Darby's saying, basically within a month, right? So within 20 working days, they have to action the dispute that you've provided to them. Now, the thing is, following up on that process and, sitting on the phones and going through emails, it's a bit of a pain in the backside. So what we've done in mycreditstatus.co today is we've literally allowed you, next to any listing that you see that is incorrect, you just click one button and follow the simple on-screen process, and it will help you generate the dispute. Like Darby said, about 80% of people have incorrect listings on their profiles. Those incorrect listings, that means that you've got stuff on your profile right now that shouldn't be there. You've got stuff on your profile right now that is incorrect, right? So it is absolutely critical that you understand it is your responsibility and only your responsibility to go and check it and fix it. Nobody else is going to do it for you.
100%. Second thing is drop a budget. why is this important? Because if you are behind on your payments, then it obviously means that you've got bad money habits. So it's very, very important that you draw up a budget, create a budget, and stick to it. We always recommend the envelope budget. You can go Google it. There's a lot of info about it. It basically means that you're distributing your monthly or your income into different categories. Let's call it envelopes, and then you pay your monthly expenses out of that envelopes. When the money's finished, it's finished. And that's basically why it's so effective as well, because if there's no money left, there's no money to spend. But the main thing for getting or drawing up a budget is you're going to be using this to now negotiate with your creditors. So after you have drawn up a budget, you need to go to your creditors and then negotiate lower repayments. So basically, if you approach debt review, right, the debt counselor, what he will do is he will go to the credit or the creditor. He will negotiate a better interest rate based on your budget. He will basically take your budget that he created with you. You will sit with your creditor and tell them, listen, yeah, this person can only pay X amount on this repayment. And you need to now come to the party and also allow a lower repayment, a lower interest repayment, and also extend the term, because that's going to allow this person to obviously lower the repayment. And then most likely the creditor will agree, because it's either that or he gets defaulted on, so he basically gets nothing. So that's why it's so important to take your budget and go to the creditor. You can approach a debt review company, but that means that your credit score is going to be 0. So it's advisable that you rather do this process on your own. So if you've got if you've got accounts that you have defaulted on, go to your creditor and negotiate lower repayments, lower interest rates, and also longer terms, because that allows you to free up some money, free up some cash flow, and start getting these accounts paid off. Because as soon as you can get your accounts paid off, the sooner your credit score can start building gradually. If an account is closed, you have paid off the account already, you've got the account, the paid up letter, you can send it to the credit bureaus. From there, unfortunately, it's just not going to be deleted from your credit profile, because it's still a listing on your credit profile. But since you have paid it up, it will gradually start increasing again. So that's why it's so important to stick to best practices when it comes to obviously repaying your monthly accounts. You never want anything listed as a default on your credit report.
Yeah, Davy, I really hope that everybody's used COVID for what it was good for. You know, pick up the phone, say to the banks, things are going cuck. My dog died. My cat got COVID, and now I can't afford to pay the full amount. I don't want a payment holiday, but I would like to pay less in interest, because that's really what you should be doing. You know, one of the best ways to improve your score long term is really just to make sure that you're spending less of your income on the stuff that you normally would, right? So, I mean, I'll give you a classic example. I reduced my insurance on Friday last week. I was with Alexander Forbes. I think I was paying like 4,500 Rand a month in insurance. Phoned them up, said, listen, I've got better quotes, which, you know, truth being told, I didn't go get other quotes, but I said to them, it's COVID, things are tight, I need a better premium. They knocked my premium down to 2,100. Now, that's a pretty significant amount of money saved. Now, that's money that can go into a property deal. That's money that can go into savings. And so one of the things that I want to say to everybody here, this is not just about checking your credit score to have a good score. It's about a holistic financial approach. So, you know, if you can take your income and you can free up more of that income to do better things with, it's going to give you a better credit score, ultimately, yes. It's going to give you access to better finance, yes. And then it's also going to give you free cash to go and settle debt, to go and invest, to do the things that you need to do. So, you know, don't just look at your credit score as a thing that you need to game, a system that you need to play. You need to really look at this as being the heartbeat of your financial soul. And if you're not measuring the heartbeat of your financial soul, and if you're not doing everything to keep that little heartbeat alive, then you're really doing yourself a disservice, you're doing a family a disservice, and you're genuinely never going to create wealth. You need to create wealth by taking the basic steps first.
100%. And then last but not least is stick to the process. By that, I mean, get your report monthly. Obviously, then look at how your score is calculated. So first thing is your repayment history. Make sure that's on time. Make sure your repayments on time. Set up monthly debit orders to make sure you never get behind on your payments. Make sure the listings on there are actually legal listings and not illegal listings. Second, make sure you always stick within 30% of your utilization ratio. I've already covered that in quite a bit of detail, but that's also how you monitor it, is by getting a report monthly and making sure that you actually stick to it. If you see that you don't stick to it, change your habits, and then next month you will see your score increasing, because now you're sticking within your 30% credit utilization ratio. Next thing is obviously then making sure that you don't close old accounts, because that'll actually hurt your credit score instead of helping you. And then last but not least, making sure that identity theft doesn't pop up and you don't become a victim of identity theft. Checking your score monthly will prevent these things from happening. And then it's just basically sticking to the basics and sticking to good financial habits. It goes without saying that a person that has got good money habits usually have a good credit score, because they repay their debt on time, and they use credit responsibly. And they basically look at it every single month, and it's something they work on continuously. And look, it takes about 60 days to form a new habit. So the best time to start is right now. If you want more information, or if you want to get your own credit score, you can go at mycreditstatus.co.za. I'm going to show you a quick example of our reports and exactly where these different sections apply on your own personal credit report. So
you can maybe just show the report, because we are running out of time a little bit. So I think maybe just show the report quickly, and then let's open up to questions, because I'm pretty sure we can have a good number of questions coming through. And if anybody is interested in going and checking out our service, you're welcome to go to mycreditstatus.co.za. Go and sign up. It's less money than you're going to spend on coffee, and it's going to save you a shitload of money in the long run. So, really go and check it out when you got time. But for tonight, we'll quickly show you what the reports look like, and then we'll open up to questions. I'm sure you guys have got a lot of questions.
Yeah, I'm sure there's a lot of questions. So I'm not going to go into detail on everything on the system. I'm just going to show you the report. And this is basically all the added extra that goes into the membership area. But here is the credit report. I just need to move things around. Can you guys see my screen?
Yeah, I can see it.
Perfect. So firstly, when you get your credit report, you will see something similar to this, right? So this is your credit score. But what you really need to look at is the kind of range class that you fall into. And this can go from very poor to excellent. So obviously what you want to strive to be in is excellent status. Good is also good, but obviously excellent is where you're going to get the better finance deals. This is usually where you get an overview of your
leverage.
Yeah. That's where you get access to, or basically a summary of your whole credit profile. And then this is actually a part that we've built in, which is also quite unique in our industry, is we can give you the likelihood of what you will be able to apply for when you're looking for finance. The credit utilization ratio is actually also something we have developed. I don't know of any other company actually out there doing this, but we show you your credit utilization score here. This will show you exactly when you're going off target. When you click on this, it's basically just an explainer video of us explaining the credit utilization ratio. The parts that are obviously essential to your credit score, we've got a little question mark here, which you can click on, and then you can, it will explain the section and how to fix it. This is just a section of understanding your report. This part explains the listings, and here's a few tips on how to increase your credit score. This part is addresses. So all your addresses actually gets displayed on your credit report. And as you can see, it will also be your previous addresses and not only your current address. Then all your historical phone numbers up to now will also be displayed on your credit report. This is what creditors send to these credit bureaus. So like I said in the first few slides, they're only custodians of the data. And then your employers will also obviously show up in your credit report. Previous inquiries. So this part is what counts for 10% of your total credit report. Like I've explained, you will see that this person obviously applied to a lot of finance, which is also one of the reasons he's got a bad credit score. Your loan accounts are loans and microloans. So it's personal loans and microloans showing up here. And then the retail account is where your home loan will show up, and vehicle finance and credit cards. And then this part is the section that's the most important on your credit score. It's your payment profile. So as you can see, this shows the months that you have been paying it, and you'll see the OK green sign, which means that you have been, this person have been up to date with his credit score. Unfortunately, there's no behind payments or defaulted listings there, so I can't show you that right now. And then it shows you judgment. So this person obviously has a very bad credit score, and this is because of the judgment. So if you've got a judgment, you can forget about getting any kind of finance. You need to sort out the judgment, and that's quite a process on its own. And then last but not least, like we explained to you, is the dispute generator. So if you click on the dispute generator, you can simply then choose which item you want to dispute. So let's assume this, it's a payboard. What you like to accomplish is either remove or update. You can upload your proof and then just click on the letter and it will generate a dispute for you. And that is the credit report.
Address the question about how long does it take to improve your score. I think that's very much dependent on each individual. It depends on your current circumstances. It depends on what actions you are going to take to improve your score, right? So let's assume you have got debt utilization ratio above 30%. Let's assume that you've got some incorrect listings, and let's assume you're going to go and dispute those incorrect listings and you're going to fix your debt utilization ratio. Somehow you come into some money and you're able to bring that debt down, right? So how long does it take to see an improvement? It will take anywhere between 3 months and 6 months for the needle to really move, right? But it depends what you do first. So we always say, start with the biggest items first. Darby's given you big tips here and said, look, this counts for 40%, this counts for 30%, this counts for 10%. So start with the thing that has the biggest impact. That's where you want to work off. So, you know, fix your payment history, make sure that you get your payment history up to date. Make sure that you're paying regularly on a regular basis. And then, you know, go and fix your debt utilization ratio, then go and fix incorrect listings. If you do those things in that order, you should start seeing the needle moving, you know, pretty quickly. Somewhere between 90 days and 180 days, you will definitely start to see improvements. If for some reason your profile isn't updating and you have in fact done those things, just make sure to keep documented proof of everything and then just go and list a dispute and say, hey, listen, this account is still showing that I owe 90,000 Rand on my 100,000 Rand facility, but I actually only owe 20,000 because I paid money in. Here's the proof of it. Please update it. So, you know, the big thing here in terms of moving your credit score, make sure that you take the action, make sure that you document what you're doing, and make sure that you follow it up, because nobody else is going to take care of it. I mean, this is a line that Darby and I use all the time in personal finance education. We always say the only thing that people are going to help you do with your money is spend it. So, you know, if you really want to fix things, you've got to take control. You've got to literally say, this is my responsibility. The other question I saw came through is around debt consolidation. Now, I must tell you, I've got mixed reactions about debt consolidation. Will it help your credit score? There's a yes and no answer to it. Generally speaking, guys, I don't think debt consolidation is the best thing you can do, right? And now there are times when debt consolidation makes sense. I mean, if you go back to early 2000, 2001, we're coming off historical high interest rates. We're talking about, I think it was 1998, we were sitting at 27% on the interest rate. And then early 2000s, we came off that. And so a lot of people were locked into credit agreements at 20%, 27%. So consolidation made sense to go to a much lower interest rate. But typically, most people going into consolidation are just making more cuck for themselves, basically. Because here's what happens. You're saying, you know what, let me take all these debts, consolidate it into one account, and I'll manage it better. Well, the truth of it is now you've got one big loan to pay off. Whereas if you have multiple loans all over the show, what you can do is you can pick those things off one by one, knock the most expensive interest-bearing accounts quickly, knock those loans as quick as you can, get those things closed, move to the lower one. So I prefer the flexibility of individual loans versus a consolidated loan. Also, many people who go for consolidation land up usually going for consolidation through a company. And most of the time, the companies that are, doing these consolidation loans, well, they leave a lot to be desired in terms of customer service. And most of the time, consumers are landing up more in shit after the fact than before they went into it. So my honest advice here is stick away from consolidation. Go back to best financial practices. What are your most expensive loans? Pay those first. What are the loans that are biting your ass every month? Pay those first. So that's really the logical approach to this thing. Don't approach this thing from trying to game the system, as I said before. Really approach it from a holistic financial perspective. If you're in that position now, it's going to be a while before you're looking at investing in property. Because here's the thing. If you want to invest in property, it's OPM, other people's money. And to get other people's money, you've got to access the best finance possible. And the only way to do that is to really show yourself as a responsible financial citizen. I saw somebody else here asking, is it possible to be on the credit score? Is it possible something to be on a credit score that shouldn't be there? If so, when disputing on your website, what documents, proofs should you upload? Well, let me tell you something. 80% of people have stuff on their credit profiles that shouldn't be there. Now, maybe I should explain how that happens, because sometimes it's a mystery to people how this happens. So data gets fed into a central database, and that central database, sometimes incorrect things go in, because what happens is, let's not use poor old Foschini as an example anymore, but let's say Edgar's is on their way out of business, and they just basically taking all their accounts, throwing it into hard drives and sending it off to Sacra and closing up shop and buggering off, right? Like it happened with Health and Racket many years ago, who then went to Virgin Active. There are people still today that have got Health and Racket adverse listings on their accounts, right? When they actually never ever had a Health and Racket account. Because what happened is they went in, inquired about opening up a gym membership. They then obviously opened up a profile with him, but actually never took up the membership, right? But now Health and Racket is gone. They've buggered off. They've died. But your data is still sitting in a central database. So, incorrect listings absolutely do happen. What you need to do is just provide as much physical, tangible evidence that you can. So a big tip I've got for you. When you go and pay up an account, please go to the provider, the loan provider, the store account, whatever, and say, when I pay you, please provide me a paid up letter. When you get that paid up letter, it will sit on your computer, and anytime there's a dispute in the future, all you have to do is go, wham, bam, here's my paid up letter. Thank you very much. This is an incorrect listing. So it's really about documenting the journey. Davy, have you got anything?
I can give you another example there. Is, let's assume you are paying towards your account now, and the finance department with that company doesn't allocate the money to your account. You have paid the account, so that is correct. But now they feed through to the credit bureaus that you didn't pay your account because it's actually an error on their side. That is one of an example that actually is happening daily in South Africa. It's human error. So it can definitely happen. It can happen. There's lots of situations where it is actually happening, and that's why it's so important for you to actually check these things. Also, like I said, another wrong listing could be if a company didn't notify you 20 days or didn't give you 20 days in writing. That's an illegal listing again. So you can have that removed, and it's pretty easy. You just need to dispute it. But in order to do that, you need to obviously be educated and know your rights.
Or Davy, when you phone into a call center and the owner is clearly answering in India, and he types in one digit wrong on your ID number, it's that goes to a completely different profile. Like, these are the realities that are happening. It's data, yes, but there's human error, and you have to accept it is your responsibility. The responsibility falls on you as the consumer, the individual, to make sure that your listings are correct. I mean, you wouldn't have the incorrect number outside your house. You wouldn't have the incorrect number on your post box. You wouldn't give somebody the incorrect bank account number if they were paying you, right? So this is the same thing. You've got to go and make sure those things are right. Davy, another question that somebody asked here is, what would you say to somebody who has no credit score at all? I think this is a two-part answer. And is there anything manageable to start off with, especially when one doesn't have a stable income in terms of getting a credit score?
Yeah, I would start off with the small things, like getting a telecom account or something like that. That's probably the easiest thing to get, because if you don't have a credit score, you're most definitely not going to get a credit card or any other kind of finance. So go for the first or the easiest things first. Insurance payments also get sent through to the credit bureaus. So that's also a good thing to have. And then just obviously apply best practices. Just pay them monthly. Eventually, after 3 to 6 months, your score will start increasing.
Yeah, and I think, Davy, this is where our holistic approach to finance maybe differs from some people. So in the example of you saying, go and get a telecom account, right? Let's say you've had no credit profile, no credit history, you're a nobody. You've come straight off the farm, you've arrived at, urban suburbia, and you're now ready to do business, right? But nobody knows who you are. What should you do? A lot of people will say to you, go and get a cell phone account. Now, I just want to say, first of all, I think cell phone accounts probably the worst thing you could ever do financially for yourself. If I can give one really good piece of financial advice, go get yourself a prepaid card, pay cash for your cell phone, stop overpaying to have the latest iPhone or the latest Samsung or the latest HTC or whatever bloody gadget it is. Just go and prepay. Don't get into cell phone accounts. That's like the first mistake you're going to make, right? So stick away from cell phone accounts. But a landline is a really good thing, right? Because number one, it shows stability. You've got a fixed address, right? Just remember this. You've got a fixed address stability. Number two, it's going to give you internet access. Number three, it's going to give you access to really good calling without having the arse end ripped out of it, like the cell phone companies. So, this is where we come along and we give a slightly different view on everything. Like people just say, go and open accounts. We're saying, please don't just go and open accounts. Think logically. Think with your financial brain. Use your medulla oblongata and really think about what you're doing. Don't just go open accounts to create a profile.
There's obviously still a lot of questions from you guys. You guys can go to our Facebook page, My Credit Status. You can just search it, you'll find it. But every week or every 2 weeks, we actually host live Q&A sessions there. So if you guys like the page, you guys will get notified when we do these live chats, and we will be able to continue answering the questions then.